This week we are coming out with two interesting webinars. The first webinar is Saturated Markets, Smarter Allocation, the Multi-Asset Advantage, where we discuss our multi-asset PMS product Sphere. And the second webinar is Simple Behavioral Rules for Smarter Investing, where we discuss about behavioral finance. To join the webinar, click the link below.
The US Boring Stocks Index, another simple, public, transparent exercise that I have been conducting. What is this index all about? 10 stocks, equal weight of 10% in each stock. We continue to hold them for the whole year. We are allowed to change them once in a year. It could be at the beginning of the year, or if you skip making a change on Jan 1, you can do it once in course of the year. I built this index along with two of my colleagues. They also run their own portfolios. Those are not public. That's our internal side gig. But this portfolio of mine is public and it's exposed to all your criticisms and all your feedback. What did I do? I built 10 stocks. I made changes on Jan 1, 2026. The 10 stocks from Jan 1 are Crocs, Uber, Amazon, Alphabet, Apple, Pepsi, Kava, Meta, Netflix, and Costco. The portfolio started on 31st August 2023, and from there to 28 February 2026, the portfolio has grown nicely, and in absolute terms, it has delivered 72.39% returns, which is significant. And this beats the MSCI World Index by a wide margin. The MSCI World Index delivered 51.59% during the same period, and the Nasdaq 100 delivered 61.28%. So we have a beat of 11.1% over the Nasdaq 100. So that's basically the performance of this portfolio. But it's not easy to run a portfolio like this because I'm not living in America. That's not my home market. For me, it's a very distant market that I'm watching from here. But I'm going to see this as a learning exercise because many of you are very keen to invest in America through the Gift City. Many of you are shown products which are going to operate through the Gift City. I want you to also have one more thing to compare. Something which you can hold a mirror to. You can show me the mirror or use this portfolio as the mirror and stare at it. But a mirror is always good in investing. It teaches us what we are doing right and what we are not doing right, how we can do better, how others are doing better, why others are not doing better than us, how we are doing something which others are not doing. You learn so many things, right? So let's see what's happened in this portfolio in the month of February. If you invested $1,000 in the US Boring Index on the 1st of February, the $1,000 became $1,032, essentially 3.26% return in the month of February for the US Boring Index. During the same period, the Nasdaq 100 delivered minus 3% return. So Nasdaq 100's $1,000 became $970, while ours became $1,032. So that was what happened against the Nasdaq 100. What about the MSCI World Index? The MSCI World Index was flat. It did nothing in the month of February. So let's see what happened in this year so far. So if you take the 2 months of this year, if you invested $1,000 in the US Boring Index, which I created, it has become $1,055, 5.5% returns. During the same period, the MSCI World Index delivered 2.96% return. $1,000 became $1,030. The Nasdaq 100 delivered negative returns. $1,000 became $961, 3.91% minus. Actually, the interesting part about this index is that among the stocks which are most fancied in the US market, the Mag 7 stocks, we own in this portfolio Amazon, Alphabet, Apple, and Meta. So 4 of the 10 stocks are the Mag 7 stocks. But luckily, Alphabet saved the day for us. in this period. And if you see the returns delivered during this period, despite three companies showing significantly bad performance in the market during 2026, the portfolio beat the Nasdaq 100 by a very, very wide margin. Let's see the margin. We are up 5.48. Nasdaq is down 3.91. So I want you to calculate what is the outperformance over the Nasdaq and write in the comment section as to by what margin we've beaten the Nasdaq in 2026 so far. But let us talk about these stocks that are bothering us in this portfolio. Uber is down 24.37%. Amazon is down 17.32%. Apple is down just 1.62%. Netflix is down 12.52%. So these four are down. And the gainers, Meta is up just 1.72%. Crocs is up 11.77%. Alphabet is up 9.69% this year. Pepsi is up 19.19%. And the big winner is Kava, which is up 58.11%. Now, going to the US and visiting multiple outlets of Kava really helped. I was blown by how they do business. And I put that stock in this portfolio and it shows. I think the trips expenses fully recovered. So that's what happened to this portfolio. And there's one more stock which I need to tell you about. Costco is up 10.16%. So when some stocks kill it, the portfolio can beat an index by a wide margin, whether it's India or US. Boring investing, if done in a sharp way, can deliver superior returns. I am enjoying this exercise while I'm getting punched in the nose in some of these stocks. Some stocks are giving me reasons to smile. Overall, it's great learning. It's great to be humiliated. It's great to beat the index also. Both things will happen. But what really happens in the US boring index is constant learning. I'm having fun. I hope you are enjoying it too. Stay tuned and let's keep tracking the US boring index month after month and see where this goes. Thank you.